All right, let's get to these banks. Scott, first off, the CNBC report about the capital ratio, and also we saw Barron's feature over the weekend that said all these banks are really cheap. Is this a game changer for the sector in your opinion, broad stroke?
I think it could help, but I think there's got to be more to it, not just capital requirements, because what does that really do for their earnings? What does it really do for the economy? We need the economy to pick up. We need the housing market to get better. We need a lot of things to happen for these banks to have sustained moves. But this is a step in the right direction.
More money to spend,
Yes.
more money to place risk. All right, so
hopefully they do that right this time.
Do it right this time. So let's get to the biggest one, the best one. J.P. Morgan has emerged as the best in breed, sort of took that title from Goldman Sachs. So where would be a good level to be interested in J.P. Morgan?
Well, let's take a look right here. It is below the 200-day. It's below a lot of the moving averages. It is holding. Remember we talked about this 40 area for support? This, if you're not in J.P. Morgan and you want exposure, here's a tier 1. Until I see a better technical landscape, I would say just stick with that. Give it more time to prove itself. But this is a decent entry down in the $40 level, but you have to be prepared to buy a little bit more lower or a little bit more higher if it starts working out. Just don't be too exposed.
All right, let's go to Bank of America. Closed above Wednesdays and Thursdays highs, which is positive, positive sign, right? But this is like the black sheep of banks, right? Yes, it's cheap, but there's so much bad mortgage exposure. Why would you even touch this one?
Because with risk comes reward, and what is this? It's below $11. So if this were to bounce with the market, probably could bounce back to $13, $14. So that's a bigger percentage move than a J.P. Morgan or a Goldman. So there's risk there, but with risk there's reward. And if you look at Bank of America's chart, it's been absolutely annihilated. Look how far below the 200-day it is right there. So you can get an easy bounce to 11.50, 12, but we need better economic times for it to see 13. But from here to there is about 25%. So if you want the risk, Bank of America could be the one you go with.
All right, Goldman Sachs trades at a premium, was one of the two that Barron's highlighted as having a premium here. Are we seeing a reversal here at this stock at all? Is it trying to gain momentum to the upside?
It's groping for a bottom. It has been a technical...
Doesn't sound so good.
It doesn't... so get Weiner to say that one. Anyway, it's been groping, I said it again, for a bottom here at this level. What I mean is trying to hold on. And it actually has been holding on as the market made new lows, so maybe trade it versus this 131, 132 area. We could see an easy trade back to 140. And then really the bounce would be to about 146, and then it really gets tough for it to go higher. It's going to need a better landscape. We're going to have to be in a confirmed uptrend for that to happen. So we'll identify that pattern, and that's maybe when you add to the banks on strength.
Real quick, want to look at Citi. Can you bring up the chart and tell me if it's the same? No, don't even bother. Okay, we got that phase.
Go with Bank of America instead of Citi if you're going to go with one of the dogs of the banks here.
A real quick question in terms of traders. Do you guys like regional banks at all that might have less exposure to mortgages, or do they just not move as much or are as sexy?
I think first you got to go with the biggest and the best. I'm not saying the big ones are the best, and then you go with the regionals. I think later this week let's put together a package of regionals and how they're acting, so we'll have them for you then.